Welcome back. Today we are going to walk through a trial balance. We're going to assign accounts as either real or nominal and then determine where they go in financial statements. We're then going to proceed in the next couple of videos to prepare an income statement, a comprehensive income statement, an equity statement, and a balance sheet. But right now, we're going to focus on the trial balance and figuring out where different accounts from the trial balance go in the statements and a little bit of discussion about why. Let's get started. What we have here, you'll see this is our trial balance for our company. It is not in the order you would typically see for a trial balance. That is intentional. It's to make us actually think through the individual accounts instead of the typical order, which would basically tell us exactly where everything needs to go. So this is going to force us to actually work through each of the accounts separately. Because of that, the first thing we're going to do is we're going to take our trial balance here and we are actually going to assign each one of these accounts. We're going to first figure out whether this is a nominal or real account. So that is what our first determination is going to be, and we're going to assign those. So let's start here with cash. Cash is a real account. So if you remember, real accounts do not get closed out at the end of the period. Real accounts end up on the balance sheet and they capture a moment in time. So cash is reported as of a moment in time. In this case, it's reported as of December 31st, 2020. So it is a real account. Nominal accounts, on the other hand, are closed out at the end of the period. Nominal accounts track transactions over some period of time. So you'll see right here, we have a sales account. Sales is a nominal account because it tracks the amount of sales over some period of time, in this case, 1 year. So these are the sales for the year. At the end of the year, when we've finished capturing and reporting the sales for that year, we actually zero out that account through our closing entries that we've all learned about before. At this point, though, this is our pre-closing trial balance. So we have nominal and real accounts on here. And we're going to go through and identify which ones are nominal and which ones are real accounts. And then we're going to figure out which statement they go on. So we might as well do that now as well. And here's our statement slash area. We're going to be pretty specific so that when we go to prepare our actual statements, we have a pretty good idea of where it's going to go. And then we just walk through and figure out exactly which statement it goes on and make sure we get everything on the right statement. Okay, so trading securities, those are securities that the company holds for trading purposes. They are a current asset and they are a real account. So they go on the balance sheet and they are a current asset. Let's go back here and fill this in. Cash is a current asset. Remember, current assets are assets that the company plans to convert to cash or use up in the next year or one operating cycle, whichever is longer. So if your operating cycle for your business, let's say you build whatever ships or something and it takes 18 months to build a ship, your operating cycle is longer than a year and therefore your current assets is anything in that case that would convert to cash or get used up within 18 months because 18 months is longer than 1 year. So your operating cycle in that case is longer than a year. So accounts receivable is also a current asset. Trading securities are considered a current asset. So sales is income statement. Cost of sales is also a nominal account and it goes on the income statement. Long-term investments in bonds. So these are investments. They are long-term. It tells us that right there. So these are a real account and these are considered investment. Next, we have long-term investments in stocks. Again, a real account, and these are also investments. Short-term notes payable. These are a real account. And short-term notes payable, these are a current liability. Accounts payable are also a real account. They are a current liability. Selling expenses. These are expenses associated with selling goods. These are a nominal account. They go on the income statement and there's the income statement. So investment revenue. This is a revenue account. So it is a nominal account. It is also on the income statement. The land is a real account. It is considered property, plant, and equipment is where the section it's going to go on the balance sheet. Buildings is also a real account, also property, plant, equipment. Dividends payable is a real account. It is a current liability. Accrued liabilities is a real account. It is a current liability. Accumulated depreciation buildings. Okay, so accumulated depreciation, it is a credit balance, as we can see right here. It's a credit balance. However, it is a contra asset. See, we have buildings here and we have accumulated depreciation on the buildings. A contra asset follows the asset that it's related to. So in this case, this is accumulated depreciation for buildings. Buildings are property, plant, and equipment. Therefore, accumulated depreciation is also property, plant, and equipment. So it is a real account and it is also PP&E. When we report that on our balance sheet, we will list them separately just for detail's sake. Usually, if you look at a public company on their balance sheet, they actually net it and just report the net balance of their property, plant, and equipment. But we will list out each of them when we do our balance sheet here. The allowance for doubtful accounts is a real account. It is another contra asset account for accounts receivable. So this is the allowance for accounts that aren't going to pay. So it is going to follow accounts receivable, which is a current asset. So allowance for doubtful accounts is also going to be a current asset. The administrative expenses is a nominal account. It is an expense. It goes on the income statement. Interest expense, nominal account on the income statement. Tax expense, nominal account on the income statement. Loss from discontinued operations. This is a nominal account. It is also on the income statement. This goes at the very kind of towards the end of the income statement after income from continuing operations. Dividends is a nominal account, but it does not go on the income statement. Dividends actually goes on the equity statement. So dividends is an equity account, but it does get closed out to retained earnings at the end of the period. Inventory is a real account. It is a current asset. Gain on sale of investments, that's a gain, so it is a nominal account. It goes on our income statement. Prior period adjustment for a depreciation error. So apparently last period we failed to record our depreciation expense, so we recorded it this period, but we highlighted that it was actually an error. This should have been last year's depreciation, but we are just now recording it this year. Oops. Okay, so this does not go on the income statement. It is a nominal account. It's an expense. It needs to get closed out. However, because it's a prior period issue, it's technically last year's income statement, but we're not reporting last year's income statement right now. So it is actually going to go in retained earnings as an adjustment to beginning retained earnings because it is a prior period error. We fix that through retrospective adjustment, which means we push the error back to when it should have been booked, which in this case was last year's income statement, which all of last year's income statement accounts should have been closed into last year's retained earnings. So this will be an adjustment in our our equity statement. ES is equity statement. Okay, so long-term notes payable. This is a notes payable. This is a real account. This is a long-term liability. Equipment is a real account. This is more PP&E. Bonds payable is a real account. These are bonds payable, so this is going to be a long-term liability. Accumulated depreciation equipment is real. This is another contra asset account to equipment. Equipment is property, plant, and equipment. Therefore, accumulated depreciation on equipment is also property, plant, and equipment. A franchise, this is actually an intangible asset. Here we are reporting it net, or at least it's in the trial balance net of amortization. So it is a real account. It is going to be, we're going to put this in a separate category of intangibles on our balance sheet. Common stock is a real account that goes in the equity section of our balance sheet. So we'll just do E for equity statement. Treasury stock is a real account that goes also in the equity section of our balance sheet. Patents is a real account. These are another intangible account. They will go in conjunction with franchises. So we haven't quite covered intangibles yet. Intangibles typically only get recorded on your books when you purchase an intangible. So that is why accounting fails to record so many intangible assets, is because you must purchase them in order to record them on your books. Okay, additional paid-in capital is a real account, and that is an equity account. So that will go on our equity section on our balance sheet. Non-controlling interests equity is a real account. This is the amount of equity that belongs to non-controlling interests. So we consolidate all the assets and the liabilities of any company that is controlled by the reporting entity. That's what we mean by consolidation. So anything that is controlled, even if it's not 100% owned, it gets consolidated. However, we have to pull out the stuff that the ownership piece or the residual piece that does not belong to the shareholders of that company. That is through non-controlling interests. So non-controlling interest equity. So that is in our equity section of our balance sheet. Accumulated other comprehensive income. This is a real account. This is also an equity account. This is accumulated other comprehensive income. Now, if you'll notice, we have a currency translation. This is other comprehensive income. So this is actually a nominal account. It gets closed out to other comprehensive income in conjunction with closing out the financials at the end of the period. And this will go on our equity statement, just like a dividend account would. Retained earnings is a real account, and that goes in the equity section of our balance sheet. So there we have all of our accounts from our trial balance. We designate whether they are real or nominal, and we've just designated which statement or which area, if it's a balance sheet account, it goes in our reporting. So the next thing we do have some additional information. Effective tax rate is 30%. We will need that as we're now going to about start to do our income statement. They have beginning common shares outstanding was 52,830. Par value common stock is $1, and they still have essentially the same number of shares outstanding. So there was no additional shares issued. And they have income attributable to non-controlling interest, this is before tax, of $970. And we will need that information when we do our income statement. That $970 is baked into the income as reported here, or as revealed here in our trial balance. So that wraps up our discussion of the trial balance, where we assign each account as either a real or a nominal account, and then put it or assign it to what statement it'll get reported on. We'll do the income statement next. Until then, God bless and have a great day.